So we're going to Accounting AS, Chapter 5, Capital Expenditure and Revenue Expenditure. So when we talk about capital expenditure, it's about spending on non-current assets. And when we talk about non-current assets, these are assets that could last for more than years. That's why we call it non-current assets. So yeah, capital expenditure, this implies to the spending on non-current assets. We talked about that. These spendings might include the following one. We have delivery cost.
Okay.
Delivery cost of an asset. And when we talk about delivery cost of an asset, we're talking about
Spending non-current assets.
Spending on non-current assets or fixed assets.
So assets that were
that can last more than a year. Yeah.
Okay.
So one way, the first expenditure here is delivery cost. The amount you spend to bring the asset into the premises. Oh, you bought an equipment. The cost of bringing that equipment to the premises, it's part of your capital expenditure.
Yes.
Installation cost, to install it, to make it work, is still part of the initial cost.
Okay.
Then legal cost, which is incurred in obtaining the asset. So whatever formality you do in that you have to pay for to acquire that asset, it's part of the cost, because you won't pay for it again after now.
Okay.
Then we have the cost of improving the asset, but not repairs. When we talk about the cost of improving the asset, that means you want to improve the value of that asset.
Yes.
But it's not like you're not repairing it or maintaining it.
Mm-hmm.
Whatever you do to make that asset, improve,
Okay.
it is part of capital expenditure, because it won't come every day.
Perfect.
Is it clear?
Yes.
Note, these costs are added to the initial purchase cost of the asset. So the amount you purchase the product with the delivery cost, installation, legal, and whatever cost you spend, it's just going to be for that particular point in time when you purchase that asset,
Perfect.
are all capital expenditure.
Perfect.
Is it clear?
Yeah.
So it is recorded in the statement of financial position. So for your capital expenditure, it is part of your statement of financial position, where you record your assets.
Financial position.
Statement of financial position.
Okay.
You have your statement of profit or loss and other comprehensive income.
Mm-hmm.
That's where you record your revenue expenditure.
Mm-hmm.
But for capital expenditure, it goes into your statement of financial position. Is it clear?
Yes.
And it does not affect the statement of loss or other comprehensive income. So whatever you spend there doesn't affect your profits.
Mm-hmm.
Is it clear? Is it clear, please?
Yeah.
So go to revenue expenditure. For revenue expenditure, I wrote, this implies to the day-to-day spending in the business. Examples of revenue expenditures are office expenses, the amount of office expenses, your office, rent that you have to pay, rates, eating and lighting, all these overheads, all overhead costs are part of your revenue expenditures.
Fuel cost.
They are all part of revenue expenditure. Is it clear?
Yeah.
Also, costs associated with the use of non-current assets will be considered as revenue expenditure, as they do not improve the assets. So if you spend on non-current assets, but not to improve it, but to repair or to maintain it,
Exactly.
it is part of revenue expenditure.
Okay, so if you maintain delivery costs, make it better, make it more faster.
Maintenance.
Yes.
No, more faster is improvement.
Improvement. That's still
Maintenance means you service.
Okay. Installation cost.
No, it is capital.
It's capital installation cost. We maintain the installation cost, so every week we install something.
Now, if you are installing a new software, it is capital expenditure. But whatever
if we
you
make
do,
the software better,
that means you're improving the assets.
so that's revenue.
It is not revenue. When you are maintaining that asset, that is revenue expenditure. Like you have a car, you service it every month.
Yeah.
So that is revenue expenditure. But if you're purchasing a new driver's license or a new plate number, or you are expanding the car, or you are putting a new seat, these are capital expenditure.
Perfect.
Is it clear now? Good.
So a capital expenditure is spending on non-current assets,
Or improving a non-current asset.
and revenue, it is day-to-day spending.
Yes, for maintenance or repair.
Maintenance.
Is it clear? Any question about that?
No.
So go to classifying now. Classifying capital expenditure and revenue. No, the difference between them. Sorry.
Yeah.
Sorry. I will explain it now. Sorry, I skipped that before now. So,
You want to write it down?
no, I wrote it. So I'm just gonna. I made 3 points. So let me just. Okay. So the difference between them are what we just talked about. One, the benefit of asset is derived for more than 1 year. So for capital expenditure, the benefit of it, the benefit you get from purchasing that equipment or machinery or technology, the benefit is for more than a year.
Because it's not current assets.
Yeah, but for for revenue expenditure, the benefits last within a year.
So it is current assets.
Current assets, like your stock, cash.
Yeah, I said it's current assets.
Then it includes initial cost and upgrade to non-current assets. So like I told you, whatever you do to upgrade, to improve that asset, it's part of capital expenditure. But if you have to repair,
okay,
it is a non-current, it is a current.
So if you want to upgrade something new, a capital expenditure. If you want to
whatever you do that improves it.
Yes, and maintain it. Okay.
Maintenance is revenue expenditure. It includes, is it clear?
Yeah.
So spending is on to increase the value.
Yeah.
So whatever you spend, whenever you spend on that capital, on that equipment, that increases the value of that equipment is part of capital expenditure. You know, sometimes you have an equipment, then you spend on it, then it looks more better,
Yeah.
and you can easily sell it at a higher price. That's capital expenditure. Yes. Is it clear? But it includes spending to maintain the value of. So if you just have to maintain the value of that equipment or machinery, it is a revenue expenditure. Is it clear? Is it clear, please? Yeah. So we'll go to classifying, which is classification. For classification, why do we have to classify capital expenditure and revenue expenditure? Because in the course of us preparing our financial statements, it is important for us to distinguish between capital expenditure and revenue expenditure. Capital expenditure should go into your statement of financial position, and revenue expenditure should be in your statement of profit or loss. Because if you don't do that, because if you don't understand, classifying capital expenditure and revenue expenditure. So what I'm saying is, as a business, you have to prepare your financial statement, right? The financial statement comprises the statement of profit or loss and other comprehensive income and the statement of financial position. So for your capital expenditure, it has to be posted in your statement of financial position, and your revenue expenditure, it has to be part of your statement of profit or loss, statement of profit and loss and other comprehensive income.
Expenditure, it is in statement of financial position.
That is the classification.
Revenue statement of profit or loss.
For revenue expenditure, because if you don't do that, you won't be. If you don't record them correctly, the value of your assets and profit will be wrong.
Yeah.
So the main purpose of classifying the capital expenditure and revenue expenditure is to have an accurate value of assets and profits.
That accrual is.
What?
Never mind. Accrual is concept.
Accrual.
Yeah.
Yes, accrual concept. Yes, thank you. So we'll go to the activity now. I did activity 1, you're going to do 2 yourself.
Okay, let me do it. Okay, thank you.
No, let me finish 1, yeah.
Oh.
They said, case study 1, activity 1, classifying the capital expenditure and revenue expenditure. Classify each of the following as either capital expenditure or revenue expenditure. The first one, installation cost of new machinery, that is capital expenditure. Installation of a new machinery is a capital expenditure. Carriage inwards on goods for resale, that's revenue expenditure. Carriage inwards on delivery of new machinery, capital expenditure. Wages to warehouse staff,
Capital.
Revenue, wages.
Wages, yeah.
Wages to warehouse staff, it's revenue expenditure. Power cost of operating a machine, it's revenue.
Because we're operating it.
Every now and then. Then legal costs on the purchase of an
Capital.
office building, it's a capital expenditure. So you have activity 2 to get done.
Okay.
Thank you.